9222.
Centuries Properties says despite the Philippines' economic headwinds, the local real estate market is resilient and could even provide a hedge against inflation. We're going to talk to the company's chairman and CEO, Jose Antonio, in just a couple of minutes, and first on CNBC. Well, like many Asian countries at the moment, the Philippines is facing a tough battle against rising inflation. But according to our next guest, one sector that could provide investors a hedge against price pressures is real estate. Joining us now live from Hong Kong and in a first on CNBC interview is Jose Antonio, Chairman and CEO of Century Properties, one of the largest privately owned real estate companies in the Philippines, also Special Envoy to China and Chairman of the Philippine-China Business Council, and also staying with us is our guest host, Gerard Lyons from Standard Chartered Bank. Joey, thank you very much for joining us on the show today. In your own words, what are the arguments for investing in Philippine real estate?
The Philippine real estate has not been the best performing market, but it has exhibited strong and consistent growth over the past years, simply because our real estate property market is really based on very low geared buying. Most of our people buy on equity, and therefore most of the purchases are really for use rather than for speculation. Hence, the growth rate has exhibited a consistent 10% to 15% per annum. And right now, as inflation has been recorded on a 12% rate last month, and while the bank rates have been very low, people perceive that it's better to buy real estate than to put their money in the bank.
Okay, and that's because of potential capital appreciation? Because, I mean, if people buy to move in to have a roof over their heads, I assume they're not looking for yield.
They're not only looking for yields, but they're also looking for a place to live. You see, the profile of the Philippine market is such that there has been a very big gap in terms of demand compared to the annual output of all the developers in the country. We have actually a very big supply need. It's only now that there is an increasing number of people joining the middle class in the Philippines, and this is because of the phenomenon of our 11 million Filipinos who are working abroad. They send back money to the country, and this year it's projected that about $16 billion will be sent back to the Philippines. And most experts believe that 1/3 of this go to housing. And because of this, there's been a tremendous demand for housing, because Filipinos, like most Asians, do really love properties as the primary investment.
Actually, can I follow up on that? Because it sounds like from what you're saying, there's great catch-up potential for the housing market in the Philippines. But two key variables that have come out from your answers so far. One, domestic interest rates. The central bank is hiking, but you seem to imply that will not have a big impact on housing. And the other, of course, is the currency issue. The currency is now under more trouble, shall we say, in recent weeks, but that has a clear impact in terms of remittance flow. So how will the interest rate and the currency environment play out? Because at the moment, neither seems particularly attractive for Filipino housing market.
Well, let's tackle the interest rate issue first. The interest rate is still at single digit, where during the Asian crisis we saw it in double digit. It's the central bank just increased last month by 0.25 or 250 basis points. This doesn't really interest a lot of people in putting their money in the banks. We're still at 4.5%. On the second issue of inflation, most people believe that continued inflation will increase prices, not only of real estate but of consumer products, and hence they'd like to hedge their money in properties.
Sir, could you be a bit more precise and tell us exactly where the opportunities are in the real estate industry in the Philippines? Is it in the residential side? Is it business or leisure?
In all three sectors, there are very strong indications of growth, continued growth. In the residential market, the supply-demand gap is such that there will be continued demand for housing. On the office market, the Philippines is next actually to Singapore and Mumbai in terms of office rental growth. So continued increases in office rental will be experienced. And one of the brightest spots in the Philippine property market is any property or any project that will be focused on tourism will actually give developers a heads up, because right now we only have 3 million arrivals in the Philippines, and by 2010, because of the new infrastructure being constructed in the Philippines, we expect more airports to be constructed and more infrastructure and roads. And the Philippine Tourism Department has projected about 5 million arrivals in 2010.
Oh, okay, looking up. Joey, gotta go. Great to talk to you, sir. Thank you for the time. Jose Antonio there, Chairman and CEO at Century Properties, live from our studios in Hong Kong, and just a couple of feet away there as well. Our guest host for the last hour and a half, Gerard Lyons, Chief Economist and Group Head of Global Research at Standard Chartered Bank. Thank you to the both of you. We're counting down the start of Shanghai trade. The market opens up in about 40 minutes' time. Interestingly,